Hello, I'm Oscar from dualmomentumjourney.com, and today I'm gonna give you the 3 main risk measures you must know. And I think it's a good time to talk about this. We've been enjoying this bull run, and eventually when we make money, there comes the drawdown. So the first risk measure you must know is drawdown, the max loss your equity curve will hit. I like to think that if you think that you can hold a 50% drawdown, divide that by 2, and there you have the max drawdown you can tolerate, and you need to design a strategy according to that, which in this case would be minus 25%. And most people is too optimistic when they think about it, because they're thinking it about the sofa and they're not living those markets with that pain. You know, what happens is, especially during long bear markets, you have 1 month of losses, you have another one, and eventually many people do panic sell. So it's crucial to manage risk. It's crucial to stay in this for the long run and allow your capital to compound. Otherwise, you cannot make money. The second one is annual volatility. When you design a strategy, you need to know this number. And for instance, the annual volatility for the S&P 500, which is basically on average how much is the drawdown, okay, for the year, is about minus 12%. So this means on average every year there's a minus 12% correction. You need to know that because most drawdowns stay on that range, right? It is tough to predict a bear market. So every time the market corrects, it tends to mean revert and continue to move higher. But eventually we have these long bear markets. So it is okay to not panic all the time, but we need to also be prepared for the worst scenario. And the third risk of measure that I like a lot and many people don't talk about is time underwater. Time underwater is crucial, and that's why dual momentum and trend following strategies do a good work here. Time underwater means how long does that drawdown last. So imagine you've made 10K on your equity capital, then you're losing it, and how time does it take to recover from that previous level? And this is crucial because it's not only how much you lose, it's how long does it take to go back. And this patience is what makes a lot of people to capitulate on some investments, and that's why it's so dangerous to hold names that are beaten down, because they can recover or cannot, but you may not have the patience for that. And I've seen people in the crypto space, there was this crypto called Cardano. The guy eventually did abandon that strategy of buying the dip on Cardano, and he had a good price. But I mean, the asset is not moving, and you get sick of holding something that ain't doing nothing, right? So in this time, it's very important to review our strategies and to have a good risk management going forward, because we might see some volatility, we might not, or it may take more time to see a bigger drawdown. All right, I'm not saying the markets are topping here or anything like that. I'm just saying that after a bull run, it comes a drawdown. So this is it for today. I mean, take care and design a strategy that you're comfortable with. Be realistic with yourself. Like, most people won't tolerate minus 50% drawdowns, all right? So keep that in mind, and see you very soon. Bye.